Well, we'll start with how US markets are looking. While US markets largely in the red, we're looking at 1% cuts across the board. We're looking at the Dow, the S&P 500 as well as the Nasdaq down 1% each. Now, of course, this comes on the eve of the FOMC meeting, which started up in the US on Tuesday. Of course, the commentary as well as the rate hike both will be well awaited, but of course, there's more focus on the commentary, and that's largely because the rate hike 75 basis points is largely what the street is expecting, markets are expecting. That's already been factored, but the commentary will hold the key because that will show where the Fed is going looking forward, and that's what most investors are focused on. That's what most analysts as well as fund houses are looking at in terms of the rate hike. Of course, the 75 basis point rate hike has led what we're looking at has led that US bond yields have gone up. We've seen the 10-year US bond yield at 3.6%. We've seen the 2-year US bond yield at almost 4%, which is the highest since 2007. And that's what's really pressuring markets. That's what's playing on the risk of trade. Of course, that will mean other assets, other currencies will start facing pressure. The dollar index has gained. It's up above the 110 mark, which means, of course, that the risk of trade will see gold as well as other commodities take a bit of a back seat. So gold has slipped below the $1,675 an ounce mark. That's, of course, even below what we saw at or during COVID, well below that level. So that's the play on gold. But when we're looking largely at how Europe closed, Europe was down 1% as well, largely pressured along with the US markets. Even its sights on where the FOMC and the Fed is headed. And that means that Asia has largely opened negative due to those negative cues. We are seeing cuts of almost 1.35% on the Nikkei as we speak. The SGX Nifty is down 0.4% as well. So we're seeing cuts across the board. We are expecting a muted start, especially for Indian markets. Lastly, on to cryptos and oil. Well, oil prices have come off those highs and well off those highs. In fact, oil is currently at $84 a barrel, and that's largely on the expectation that recession will kick in the US as well as globally, and that will mean that the demand for oil will come down, which is why oil is currently under pressure. And that's where oil is. In fact, Brent is just above that $90 a barrel mark. Moving quickly on to cryptos. Cryptos are under pressure largely due to the risk of trade that's at play, and of course some amount of turmoil in crypto markets in any case. So we are seeing Bitcoin now well below that $19,000 mark. It's in fact around that $18,500, and that's where it seems to be settling in at least this week, yesterday as well as today. But that's where we're looking at Bitcoin and cryptos as well. Largely we're looking at a muted start, especially for Indian markets, on the back of some headwind in terms of global markets and global cues.